As the coronavirus transforms the way we work and the way we live, what are the critical issues that business leaders are facing right now? How do they identify the key parts of their business most likely to be impacted? And where do they start prioritizing the steps they need to take to mitigate those risks? These were the issues at the core of a recent AICPA and CIMA webinar, and we'll be playing you a recording of that webinar in this episode 102 of the Go Beyond Disruption podcast. From the AICPA and CIMA office here in the UK, I'm Kyle Hannam. Thank you so much for making this podcast part of your day, especially during days like these. Days in which the world is dealing with the unprecedented impact of COVID-19 and businesses are faced with the challenges of protecting staff and customers, executing risk mitigation plans, and at the same time, honouring commitments to their stakeholders. Ashok Noah is Vice President for CGMA External Relations at the American Institute of CPAs. In this role, he serves as a liaison to CFOs and CEOs to understand how finance teams are evolving, and he also guides AICPA initiatives to help management accountants create more value for their organization. Christina Kite is Vice President for Global Business Strategy and Analytics at Oracle. And this is a recording of their recent webcast interview. Ash and Chris discuss the critical issues that business leaders face during the corona crisis. They take questions, and they also share practical suggestions to help business leaders manage these unique circumstances. And before we start, if you need guidance specifically for accounting and finance professionals, visit the AICPA and CIMA's online coronavirus resource centre at aicpa.org/coronavirus. That's aicpa.org/coronavirus. Now, over to Ash and Chris.
My name is Ashok Noah. Thank you for joining us. We wanted to talk about business continuity planning today. We want to also look at, in the future, and we'll announce these dates, we want to get into some scenario planning and a really important aspect in these times, talk about human capital management. So the webinar today is one of the first in the series. And what we want to do is really give you the ability to take a few steps. How should your businesses, your organization respond to the current scenario, which is really unprecedented? We haven't seen anything like this play out. It has been in playbooks for a long time, but this is really happening this time. And recognize some of the ways that you can really help your organization to mitigate these risks, but also look for opportunities and see how you as the finance leader can really help your organization to influence strategy and to really make a strategic impact. And it is really our intent today for Chris and I to be able to give you some real tools. I'm a former CFO of a global logistics company, and currently I work for the association and am leading the learning and development function of the Chartered Global Management Accounting designation. And Chris, I'm really excited to have Chris on the webinar with me. She really is a fantastic speaker, but also her experience and her current role make her ideal to be engaging with us today and to give us some insights from her time, not just now with Oracle, but also going through the financial crisis and being at the Federal Reserve in New York. Really puts her in a great position to be giving us some direction, advice, and insights as we try to navigate into the future. Welcome, Chris. Thank you for being with us.
I appreciate having an opportunity to speak with all of you. Just a little bit about my background. I've been at Oracle just shy of 5 years. And prior to my current role, where I run business strategy and analytics, I was the finance business partner for our North America Tech division, which is approximately a $4.5 billion division. Prior to that, as Ash alluded, I was at the Federal Reserve of New York, and I ran strategy and operations there. Part of the reason why I may refer to that is not just the financial crisis, but I was also responsible for all of our critical infrastructure. The Federal Reserve Bank of New York runs the entire critical infrastructure for the entire Federal Reserve and the movement of money out of our East Rutherford operations. So we weathered through even weather events like Storm Sandy, and business continuity was certainly not only important to us, but we'll talk a little bit about some of the other tools that we used during those periods of time. Prior to that, I was at Cisco Systems, and the only reason why I mentioned Cisco and my role there, where I was vice president in our Treasury and Tax organization, part of finance, was I was responsible for 5 years, my last 5 years at Cisco, for physical security. We called it business resiliency, global real estate and workplace resources, and we also tied enterprise risk management into that entire function. So we'll talk a little bit about some of the challenges we face there and how that may be applicable to where we are today across many, many different organizations.
Chris, thanks again, and welcome. How did you look at your business continuity planning within your organization? And did you have a plan or did you not? And moreover, this is something for you to consider. If you did have a business continuity plan, what we're finding is we didn't really have a plan for a pandemic. Chris, you were talking about how this pandemic event has been on the top right-hand corner for a long, long time. You had some comments around that.
So one of the things that we always look to in terms of understanding risk mapping and what were the global risks facing the world. At Davos, Zurich, many of you may be aware of Zurich. Zurich is one of the largest insurance organizations in the world. Zurich would always produce, as part of that Davos annual meeting, what they called their annual risk report. It's a very, very well done report. And if you look at their risk map, which they always produce each year and refreshed, we've always had what we call those near misses, or low frequency, but very, very high severity events. And we've always seen that pandemics has always been part of that annual risk map update. It's not like it was a new risk that has appeared in the last 5 years. It has been a risk that has always been part of their annual risk map and overall report. It's not just a map. They also produce a report for those of you that may want to access it. So this is a known risk. What has been unknown about this particular risk is the quantification. Should a pandemic come to pass, the severity has always been something that's been unknown. But the factor, the probability that a pandemic was a probable event, even though it was remote, has always been identified by those risk and insurance organizations.
So it's something for us to, even as we go forward, the reason we're all here really is to consider that. And when we look at how quickly this has happened and how quickly things have unfolded, we ran this CPA Outlook Survey around the economic indicators and the outlook for the next 12 months. And this survey was published on the 5th of March, just about 2 weeks ago. And you can see how the index actually went up. And if we were to rerun this today, it would be a completely different story. And even as we were in the latter stages of this survey, we compared some of the later responses that came in after February the 25th on how you feel about your organization in terms of growth and the economic outlook and the impact of the coronavirus. And you can see some movement from optimism to being neutral. And if we ran that now in the situation we are in today, this would be, again, a completely flipped response rate. So things have moved really, really quickly. And what we need to be doing now is saying, it is not too late. If we had a business continuity plan, if we hadn't planned for a pandemic, but we still have a plan, let's start to look at what's next. And I want to hand you over to Chris here to start talking about where are we going, where are we, and how are we going to move through this presentation and what we're talking about. Thanks, Chris.
I actually took this particular framework. I wanted to make sure we didn't necessarily push Oracle's overall framework. So I specifically took a framework that we can align to, and hopefully many of you are aware of the company Marsh McLennan. We currently, if you look at where we are today, we're in the response. The opportunity, as Ash alluded, is still there for us every moment to plan forward and to look at what you can do today to, in many ways, not only stem the losses, but could, in this situation, are there opportunities as well that organization could be taking advantage of? The first is really to be able to conduct not only your response and to manage through the crisis, but also are there other opportunities from an organization's perspective that you should not only be modeling from the upside of this particular risk, but also how and what are the most important activities the organization needs to take. This is called triaging, and in many cases we're going to talk in some of the later slides around how does an organization triage and be able to understand not only what are their top customers and how do they understand those critical customers from the less critical. Same is true with suppliers, the most critical from the less critical. In the employee area, which is always our greatest and most important asset, every employee is important, but you will want to, again, triage those employees that need to help sustain the organization's day-to-day operations, such as in the case of Oracle. We need to be able to quickly identify those critical resources we need to still be able to help us run our data centers. The importance for us, since we are a cloud service provider, the importance for us to be able to run our data centers 24/7 is critical for us to be able to also support other organizations that are running critical operations, such as banks. I won't necessarily talk about specific customers that we support out of privacy, but more importantly, we support some of the biggest banks in the entire world. We support hospitals. We support many, many different industries that are critical to the health and well-being, not only of the United States, but of the world. Us being able to understand those resources that we need to help sustain our 24/7 operations is another way that we have to understand the critical from the less critical. We'll talk a little bit in how and what could be a 5-point step program that should your organization have a continuity plan or should your organization perhaps not have a continuity plan, how can you be a hero today, a leader today, and helping manage and participate in helping to lead the organization through this crisis? One of the most important reasons why when Ash called to have this forum and this series of discussions is this is a great opportunity for finance to not only have a seat at the table, but to exhibit leadership at that table. And we'll talk a little bit about whether business continuity reports into the finance organization. How can finance still have a very, very strong role in the organization's response to this particular crisis?
And Chris, everything hasn't played out yet. Most of us are still well. Most of us perhaps are working from home. I saw a few comments as people came in saying WFH. Yeah, many of us are, and many of us are well. But we are going to look at scenarios where it could be that 1 in 5 or 2 out of 5 of us are actually unwell, or our staff are unwell. So we still have time. We still have time to plan for that. And hopefully this webinar is going to give you some ideas on how you proceed and what you focus on.
This is really a 5-step plan. And in many cases, even though we are commenting specifically on business continuity, the most important aspect is whether you have a plan or not, I would say the probability that plan could easily be lifted up and enacted today out of the plethora of organizations that are out there across perhaps 21 industries, vertical industries being financial services and insurance, telecommunications, fast food, in many ways retail. Those are examples when I say across 21 industries. The fact that the organization could easily pick up their plan, move to a playbook that is around pandemics, and easily adopt that plan today from an operational perspective to begin executing on it, I would say probably at least 2/3 of that plan may not be applicable because you couldn't have really simulated everything that we're seeing today. And even if you could, the rapid change, the velocity of change that's happening across the world will absolutely cause some of those assumptions to need to be revisited. So the first point and or step in the plan is quickly refresh your business impact analysis. A BIA is something that a business continuity function or team is very well versed in and can actually do. This is something that you'll be taking your plans, you'll be taking in many cases those assumptions, and they need a refresh. Not only will they need a refresh today, but it will be something that we'll talk about from a continuous monitoring perspective. Because even if we were able to do the BIA today and we were able to do it organization-wide, which would be in many cases, at least for a company the size and complexity of Oracle, would be challenging to do. It might even take us several days to really refresh that business impact analysis. Probably by the time we refreshed it, we would also see changes to it. So that gets into how do we really not only quickly do that type of analysis, but how can we form and quantify the risks that we see based upon it? Now, when we were talking, Ash and I were talking and planning for this particular discussion, we wanted to not only talk about the risk in terms of danger or loss that an organization may incur and what are some of the mitigating factors that you need to consider for that loss, but also could there be some upside to the risk? And are we also looking at the upside by introducing new models that will help not only stem the loss, but could also be a new way that the organization could think about getting their products or services to customers or to other stakeholders. And we don't want to lose that opportunity during a crisis to always look at what could potentially be the upside of this situation and how do we, in many cases, look at both danger as well as opportunity. Now, opportunity is not raising your prices so that in many cases you can manage your bottom line better because you're growing and or increasing your prices for your top line. This is really looking at, could we in many ways shut down certain facilities, operate sales online, and over time could that become a more sustainable model for the organization or a channel that perhaps we weren't leveraging that you could leverage. This is the importance of doing the risk analysis and mapping. It's not only being able to quantify your risks, especially those that present danger to the organization, but it's also looking at could there be any upside in some of the risks that we're currently understanding or modeling, and you'd want to be able to do both. We'll get into scenario modeling in a little bit. That will also be part of Ash's continued series. So we'll talk a little bit about how you can use scenario modeling. As being part of the Federal Reserve, one of the techniques we use continually, and it's not a new technique, especially if some of the audience is familiar with banks, large banks, and or other organizations that use what's known as Monte Carlo. The Monte Carlo simulation technique is not new, and it's not something that many organizations are not familiar with, but it gives the organization the opportunity, using the Fed as an example, to look at 1,000 models if they're trying to model something. A lot of different opportunities to not only do what if, but to also change some of those variables, to weight them differently. And by creating that model for your organization, it is something that you could have in place. And we'll talk a little bit more about that. When you're a team, a very, very small team, usually this type of analysis during a crisis situation is very top-down. Some organizations, as part of their business continuity plan, would have already identified who is that management committee, who are those subject matter experts that we need around the table, and they're usually led by an individual known as an incident commander. In the case of us nationally, you'll see that Mike Pence is actually playing that position for our president, Donald Trump. So usually there's an incident commander. They're going to take the information that this task force, whether it's organization or as we've seen at the national level, here, at least in the U.S., I want to be thoughtful that it's a global audience, but here in the U.S., we've been able to have ongoing communication from the task force that has been put in charge to really model all these different scenarios, all these different variables, and to be able to then get the organizational alignment around, okay, even though we've modeled various scenarios, we've looked at best case, worst case, most probable case scenarios, where are we going to land so we can actually then create action plans and then monitor those action plans, because inevitably we are facing an unprecedented crisis. So even though we may put action plans in place with measurements that will tell us whether it's working or not, how do we continuously monitor that? How do we course correct? How do we adapt? And that's something that is not in the 5-step plan, but is absolutely important. Your organizational culture, your organizational history in being able to manage change is something that, if you're listening to this discussion, which all of you are, will really be a major, major assumption in how well you're able to not only respond to this crisis, but to really, as part of your recovery, make that recovery period even shorter than what it may be today by not using some of these tools and techniques that, to a finance professional, have been the way we've always worked. If we look now at each one, taking perhaps your BIA, number one, can you leverage anything, not only for what you may have developed in your playbook around a pandemic, if you had such a scenario, but also other scenarios that you may have undertaken as part of your business continuity planning. Let me give you an example. In California, where Oracle's headquartered, it is a known risk that earthquakes are probable. Nobody can predict when the next earthquake will occur, but we need to have a plan in place for an earthquake. Part of modeling for an earthquake not only assumes the event, we've had an earthquake, but a lot of those playbooks are usually also looking at a very, very long time horizon. From the time an earthquake happens to when an organization can be fully operational, especially if it is a high magnitude earthquake, such as what we all saw occur in Japan. In many cases, you need to not only be ready for that, but you need to be able to leverage some of those scenarios, some of those plans. So number one, can you leverage something even though it may have been actually developed for a different type of risk than what we're seeing today with the virus? You also are going to need to do a very quick gap analysis. We're used to doing gap analysis. Where are we today? And then as we look at the time horizon, which we'll talk about in a little bit, how can you quickly hover around the 3 major areas of an organization? There are many, many other stakeholders. We went with our top 3. First and foremost, employees. If your employees are not safe and secure, in many ways, you'll not only be able to tap those critical resources that you will still need to depend on to help sustain your current operation, but also during your recovery, how do you build employee loyalty by demonstrating to your employees today, whether that's finding ways to still pay employees because of their current inability to come to work, especially your contractors. These are philosophical decisions that organizations are going to need to make. But first and foremost, you want to protect your employees. You also want to use this as an opportunity to build upon employee loyalty, employee retention, because the way you manage through this crisis, the way we lead our organizations through this crisis can have everything to do with when we are in that recovery period. Are they going to stay with your organization because the organization did indeed put their most important asset first, which is our employees? Customers, as we know, first and best are our customers. How can we make sure that our customers are being serviced, especially being a cloud service provider as Oracle is? We have to put not only our employees first, but also our customers. How do we make sure, especially those customers that are performing critical infrastructure activities and capabilities for the globe, how do we make sure that we have not done anything to disrupt their ability to continue to offer their services? It is a different type of supply chain that is a value chain. Our ability to service our customers enables those customers to be able to service their stakeholders, whether those are government agencies, whether those are organizations like pharmaceuticals, like banks, that have to operate for the entire organization, for the entire world, to really be able to operate effectively. From a supply chain perspective, again, an example of where you could perhaps leverage one of your playbooks and refresh it to what does this particular scenario need to be updated for a pandemic would be, we've always modeled supply chain disruptions. We know we can have fires in our supply chain. We know that supply chains, because of lack of certain components like semiconductor chips, there's a lot of different reasons why your supply chain could be disrupted. Could you, again, understand those plans, leverage those plans, and in many cases, do a quick BI to refresh those plans, because this is when not only will you shorten your time to be able to create that new action plan for this particular situation, but also because of the velocity of change, you may not have enough time to create a plan from scratch. If you are one of the audience members that does not necessarily have a large organization that has a business continuity or team within it, and or you've outsourced it to a third party, this is an opportunity for you. There's lots of good business continuity templates, lots of good business continuity plans that you can leverage that are out on the web. Some of those business continuity plans are by industry, they are by particular risk, and I would encourage you that if you are an organization that may not have all these plans in place, if you do have the plans in place, you may not have recently tested them, or you may not have recently refreshed them. This is an opportunity, regardless of where you're at from a capability maturity model perspective, whether you're at stage 1, no plan, and I have to create one, or whether you're at a level 5, where from a regulatory perspective, you not only have a plan, you've tested that plan, you've been able to fail over, you have your redundancy, you have your people in place. Regardless of where you are in that business capability maturity model, it's not too late to get started, and starting with your BIA is one of your most important activities, because if you don't understand where you are today, as well as where you need to prepare, whether that time horizon, as we look at scenario modeling, whether that time horizon is, where am I going to be 3 months from now? Where am I going to be 6 months? Where am I going to be 6 months and beyond? You will need to be able to at least put something down that you know, and that's part of not only scenario modeling, but part of business continuity planning. It can be very overwhelming if you're perhaps at a stage level 2. I have a plan, hasn't been tested, hasn't been refreshed, and in many cases I need to do that today. If you're able to not only do your BIA fairly quickly with a cross-functional team led by whoever your incident commander or your leader is within the organization, one of the best techniques that you can then deploy is scenario modeling. The reason why the scenario modeling is so important is, especially with this particular virus, the velocity of change every single hour. This is where you could have real-time updates, whether those are economic updates, whether those are updates from your supplier base, whether they're updates from your employee and workforce. This is where your ability to build the model once could be continually updated. Your ability to create some type of Monte Carlo simulation, which is really a capability that banks use, not only for long-range planning, but they also use it frequently for what-if analysis, especially if they want to run through several hundred scenarios at one time and just change perhaps one variable or weight another variable. One of the things that Ash talked about that's very important is, and we've heard this as a major operating assumption, that we've quickly gone from plan for a 2-week shutdown to we are now looking at an assumption where this particular recovery period could be anywhere from 0 to 18 months. Second assumption, it could be in waves, where we are seeing in one part of the world, South Korea, that assumptions that we had in place 2 weeks ago and felt that they were recovering, we've now seen another spike. This is a fast-moving risk. This is a risk that needs to be modeled discreetly. Today, what do I need to do? But you also need to build your models for a continuous view of the organization so that you can both look at today, very short period of time, but also be able to model over time, what does this mean? And the reason why the overtime is so important, let's take your workforce as an example. Today, you may be able to quickly have a snapshot of where your resources are critical, from the most critical to the less critical. However, as we know, and especially because this is a health-related risk, we are going to have to be able to model how deep do we go in the organization, especially based upon skill. And at what point in the organization will we begin tapping out on capacity? The sooner you're able to model that and understand that, the sooner you're able to really help make sure your organization, your critical resources, your critical employees have an opportunity to not only get rest and be able to be replaced by that second tier bench, but you may have to go to your third, to your fourth, and to your fifth tier bench. Because it is a health-related risk, you could actually have people that not only get sick and can't come back, but in many cases need to be able to transfer their knowledge to someone else. How will you begin to build that capacity in your organization? If you can only go too deep in your skill, how can you begin that knowledge transfer today? Even though that knowledge transfer and that individual or employee that you're trying to quickly train up may not be available or needed to be available in 3 weeks, you will have taken the preparations today to make sure that you go 3 deep, 4 deep in your organization. Today, you're going to make short-term decisions that could have long-term ramifications. One of your best tools to use to be able to prepare yourself for that is to simulate what if. Changing variables from supply chain variables to workforce variables to regulatory and or economic variables to a plethora of variables that I know Ash, because he's going to have a separate series on scenario modeling, will look at not only discrete and continuous modeling, techniques like Monte Carlo simulation, but also the tools that can be used during these types of situations where much of this is prepackaged. And if your organization, again, is not used to doing scenario modeling, how can you use a particular commercial off-the-shelf software to lead the organization through what you should be thinking about, almost like a checkoff list? So these tools are readily available. How quickly your organization may need to not only become familiar with them, but leverage them is really based upon where you are in this maturity model. Are you at a level or a stage 1? Are you at a stage 5? Or are you somewhere in between? that will be something that you hopefully can think about, and we're giving you at least some of the ways we're thinking about it or have thought about it in the past.
Thank you, Chris. And you really made a few key points. I'll just pick up on a couple of those. Is the decisions you make today and how you respond to your employees, your customers, and to the suppliers in your supply chain is going to be long remembered way beyond the next 6 months. And this has permanent implications on reputation, permanent implications on future relationships. So it really is critical that these things are thought through with the lens of the long term. Even though these are short-term decisions, how these are taken and how these are made will really have long-term impacts. We talked about a few scenarios, and maybe that's what you should be looking at. At least there are two major scenarios that you need to plan for. One is that there is a delayed recovery, and that this virus is going to perhaps be under control by the end of Q2, but the growth, the economic growth is stifled, and then there is a prolonged contraction perhaps in the economy. And how do we respond to these two scenarios? I think these are some bases to start off. We will, as I said, have another detailed session on scenario planning, but in the meanwhile, I wanted to direct you to this resource. In terms of trying to adapt the plan, as the Chartered Global Management Accounting exam that we have worldwide, we had plans around the shutdown of certain examination centers, but we didn't really have a plan for all the examination centers around the world shutting down. And as someone has said before, necessity is the mother of invention. And we put our heads together and we are looking at alternatives as to how can we serve our customer, the student. They have been studying, they've been working hard, and they want to continue their progression through the qualification. How can we deliver exams on their desktop at their homes and yet make sure that these exams will be valid, will be legally defensible? We will know who's taken the exam, and we'll know how the performance has been a genuine performance. So fortunately, there are technologies available today that we are able to rely on in terms of webcams, in terms of the distance learning and distance testing tools, and we're coming up with options that we didn't really have on the plan. But being in the situation and then looking at what was the plan and building from that and adapting that is really a good starting point. So thank you for those pointers, Chris. Considering these scenarios that are unfolding, what should you be doing around your business, around your strategy, etc., around risk, analyzing those risks, mapping those risks? Over to you, Chris.
Risk mapping is something that a lot of organizations do. Very important. Do you have a risk map? But probably more important is refreshing it, updating it today, looking at today's scenario. Where are we? Where are our greatest risks? That's the first step in action planning. It not only looks at the likelihood of something occurring, and for the finance professionals, we've always looked at likelihood. We've looked at remote to certain, and in between is probable and possible. So you can keep it really simple. That's a tried and true way. We've always looked at it from a finance perspective. When you look at impact, that may be a little bit more difficult. That's quantifying now the severity. Again, as finance professionals, we're used to dealing in ambiguity. We're used to creating a plan. We're used to creating a budget. It all starts with assumptions. So if you haven't undertaken a risk mapping exercise before in the organization, it's not only fairly easy to perform, but absolutely use the guidelines that ASH is making available to you, that the AICPA is making available. and I would strongly encourage, do that risk mapping, look at it over time, and that's what forms a lot of the basis of the action planning, because now you've quantified the risk and you've identified the top risks. If we look at the next step that we briefly talked about, you're going to see that back to the Marsh-McLennan framework, there is continuous monitoring, continuous communication, especially during this particular crisis. This is one where, similar to the financial crisis, fast-moving, lots of changes within a very short period of time, it was absolutely an economic shock to the world. We are experiencing the same with this particular risk. This is a situation where evermore your communication plans. Let me give you a simple example. If someone in your organization isn't combing through your supplier contracts today, they should be. They should be identifying the clauses in the contract if you are a preferred customer of theirs. And if you are not, can you begin negotiating with that particular supplier? It may or may not be too late to do it. It's a simple activity you can undertake that's all about not only organizational alignment and communication, but it's continually monitoring the situation. And as things perhaps get worse before they get better, what can the organization do today to stem that loss, especially during recovery? The last one, so we can get to the questions, is not only what we talked about, that action planning, but even as you put actions in place, as soon as you put them in place, they may be obsolete. So that monitoring, measuring, reforecasting, getting those feedback loops, and being very adaptable can literally be the difference between not only what you experience in terms of loss, but also how you can shorten that recovery period and build customer, supplier, and most importantly, employee loyalty. Take advantage of this time to build that by making smart, informed decisions as best as you can.
The other thing I just wanted to mention was the AICPA is in discussions with the Finance Committee at the Senate, and what we would really like also is some of your feedback as to what we can take to the policymakers at this point in time as to how can they help businesses. One of the key things to be addressed, and that all of you, I am sure, are addressing, is liquidity, actually getting cash and liquidity in the hands of businesses and individuals who need them. So what are those ways that can happen? Obviously, you've seen the government's response in terms of sending checks to every American. Payroll tax has been bandied about for a while. In terms of really loosening up the credit markets, you can see they're acting very quickly. In terms of debt covenants, loan covenants, so that companies, borrowers, debtors are not in default, is another angle that we are pushing policymakers with regards to putting a moratorium on some of these debt covenants to not trigger any defaults. So if you have any other ideas, there's a good bunch of you on this webcast. I would really like your input on some suggestions that we, as representing the profession and representing the finance leadership of this country, we can take to Congress, we can take to the policymakers as suggestions that they can consider. So that is in addition to the polling question. What we do want to do for our next round, which again you'll see on our website, we do want to get into some more detailed scenario planning exercises and have perhaps Chris or someone else join us who has developed these scenario planning exercises and can talk about, how do you go about from start to finish defining the scope and issues around a scenario plan. What are the types of drivers? What are those drivers that are consistent? What are the drivers that change in these scenarios? how do you collect and analyze some of that data so that you can make data-driven decisions around these scenarios and really then apply these scenarios to how things are playing out. I do want to try and see if we can go to these questions in terms of the content, and there's a fair bit of feedback in the inbox, but I'm just looking at the content questions now. There's a question in terms of the prolonged nature of this pandemic, and the question is, do we think that the business shutdowns and teleworking could potentially last 18 months? It could be something we said about the prolonged effect on the economy and prolonged effect on the economic recovery. I don't think either of us said that this situation would continue for the next 18 months. Chris?
I think that this gets back to worst case scenario, and should there become waves, such as wave one, we've been able to contain it, then there's a second wave or a second spike or a third spike. This is where, because we are in uncharted territory and still learning about this particular disease, always being able to look at something over time enables the organization to at least conduct a what-if scenario. Looking at something in a longer term just allows you to say, do you, A, believe that it could go longer than 6 months? If so, model it. Put the assumptions down that you know. This could, again, help you to look at, similar to stress testing in a technology analogy, we stress test an application to know when it's going to fail so that we can then design for the resiliency. The more that you run scenarios that will stress test your organization, you will understand everything from your cash flow projections to things that you may want to do operationally, either with your suppliers, your employees, or with your customers, based upon running those scenarios. The scenarios really help aid the conversation that decision makers oftentimes need to see in order to then align on the plan forward. By running the scenarios, they can quickly say, well, show me it this way, show me it that way, take this variable and run that. And that's where I've seen it, especially having been at the Federal Reserve, having been at Cisco. I saw there was a question about board of directors. Absolutely. In my role of business resiliency, at the time it was the avian flu, I had to brief Cisco's board of directors on our readiness and preparedness for the avian flu. We, at that time, showed various scenarios. Again, planning for the worst case enables you to have a plan in place should that come to pass, even if you're trying to get to a more realistic scenario of what do we need to do today. So part of my 18-month time horizon was a what if, very worst case scenario. It did come from, just those that were maybe interested, it did come from a news update by the task force that was saying they were doing something similar, running worst case scenarios, planning for what if, because at their level, with that complexity, they have got to have multiple plans in place, multiple scenarios, especially with the fast pace that this particular risk is moving.
There's a question around having workforce work remotely. Any advice and thoughts? I have a team that has been working remotely. What we do is we have daily stand-up calls, and they are, for example, just to make sure that everyone's okay. Anyone who actually lives alone and lives by themselves has been identified. We check in, make sure they're fine. We have regular meetings which are around the business continuity issues, but that's a separate meeting. We do want to make sure everybody's okay first and they're doing fine. The level of usage of team rooms on Microsoft 365. That's been very useful. Zoom facilities have been really useful. The amount of technology and the technology available today has made it easier. I remember a similar scenario. I was based out of the Middle East during the Gulf War, and we did not have cell phones at that point in time. We did not have the technology that we have today. So technology has made a lot of this possible. So leverage technology as much as you can. Skype or Zoom, chat boxes on Skype are helpful to remain in constant contact. And any other points from you, Chris, in managing the workforce at this point in time?
I think allow for patience from everybody. Individuals that are working from home, in many cases, if they have children that they're also now performing double duty. They're taking care of their children, making sure their children are occupied and safe, and at the same time, they're also trying to perform their work. So I think part of any leader needs to be very empathetic and sensitive to this is business unusual. And so I think a little kindness and a little patience go a long way, that everybody's trying to adjust and adapt. Over time, it'll get easier for all of us, especially if the duration is a lot longer than any of us anticipate today, knowing what we know. So be kinder and allow for just a bit more ropes for everybody, from deliverables to starting the meeting off with how are you doing, especially if people need to vent and or just need to have someone to talk to as they're extremely in a stressful situation. For those that work remotely and have been for just as part of their overall job responsibilities prior to the risk and the virus, they've been posting tips that I think are really, really helpful. I've been sharing some of those tips with my team, just as Ash alluded to. And I think that helps all of us learn together. So those would be my thoughts.
Thank you, Chris. And there is a question on, do we need to redesign our business processes in order to accommodate the potential reduction in staff? There's even a more fundamental question that I think we should all be thinking about. Is yes, what about our business processes, but what about fundamentally our business model in how we conduct business? Do you want to take that? And I'll have a second pass after you, Chris.
I'm not going to like my answer. It depends. I feel that depending upon your organization, your industry, also the duration that this particular risk continues to take effect, will have everything to do with how much your business processes will or will not have to change. I do think having these models in place help you look at perhaps new ways that you may want to work that you would have never maybe thought of, but you may be pushed to, such as sales online selling. Is that something that we are being moved to? Yes, we are moving to being able to sell online. We have to continue to look at that as a model. That's something that may or may not be applicable to your organization, but it will depend, and that's why that business impact analysis is ever more important. It will help you think through all of these different questions in a very methodical and check-off list way.
I want to address another question, very, very pertinent question around the risk analysis. Can this risk analysis be concluded to close off business for service companies with poor cash collection? So is one of the options closing the business? I believe the risk analysis, business continuity, fundamentally is assuming you want to continue in business and taking every step you can, coming up with every option possible to continue. So BCP is fundamental to everything we're talking about today, is one of the options closure? And if it is that imminent and that obvious, and these are perhaps may not necessarily be your business, but restaurant businesses who are paying payroll from previous week's collections, there are businesses that would be vulnerable. What should they be doing? Any thoughts, Chris?
Do you have insurance? For some businesses, there is not only business disruption insurance, but there's also other ways that some organizations may have transferred this risk. Not knowing your insurance policies for business disruption, I couldn't answer that. Absolutely is one scenario, going out of business and or shutting down my business. I will tell you there isn't a higher education institution, at least here in the United States, that isn't running the scenario that they may shut down and that classes may have ended for this particular year. What does that mean to us? What does that mean to our higher education institution? What does that mean to graduation? What does that mean to a lot of different what ifs that would take us too long because we're at the top of the hour? But that's a perfect example of shutdown.
The other thing we have taken to the Senate committee is the whole issue around business interruption. Most policies have a pandemic as an exclusion, and so any help from the policymakers around navigating that particular clause would be very helpful as well. So as we conclude this, Chris, thank you for taking the time out of your very, very busy schedule, everything that you are directing and involved with for Oracle, and taking the time to share your expertise, your thoughts, your guidance. It's been extremely useful. We'll try and address some of these other questions that we haven't been able to answer and get back to you on that. But please, as you close this out, if there are any suggestions around what we can take to the policymakers, I'll just close out with that. Please do put it in the question box. It'll be very useful. That's it from me. Thank you. And Chris, thank you very much. Any final thoughts? And then you can close it.
If you have never read the book, Black Swan, it's very applicable. And remember, as finance professionals, we've always been looking at variances, trends, making correlations, dealing with ambiguity. Please, it's a wonderful time for the finance professional to be a leader for their organization. Help the organization quantify this risk, develop an action plan, and good luck.
Thank you and goodbye.
Ashok Noah and Christina Kite on the critical issues that business leaders face during this corona crisis. If you need guidance specifically for accounting and finance professionals, visit the AICPA and CIMA's online coronavirus resource centre at aicpa.org/coronavirus. That's aicpa.org/coronavirus. We'll have a link to that and other resources in our show notes to this episode, which you can view from inside your podcast app. And that's it for this week. From the AICPA and CIMA office in the UK, I'm Kyle Hannon. Till next time, stay healthy. Goodbye.
Thanks for listening to this episode of Beyond Disruption, brought to you by the Association of International Certified Professional Accountants. Learn more about today's topic at AICPA-CIMA.com/disruption. This podcast is designed to provide illustrative information with respect to the subject matter covered and does not represent an official opinion or position of the Association of International Certified Professional Accountants or any of its subsidiaries or affiliates. It is provided with the understanding that the association, its affiliates, and subsidiaries are not engaged in rendering legal, accounting, or other professional services. If such advice or expert assistance is required, the services of a competent professional person should be sought. The association, its subsidiaries, and affiliates make no representations, warranties, or guarantees as to and assume no responsibility for the content or application of the material contained herein and expressly disclaim all liability for such damages arising out of the use of, reference to, or reliance on such material.